hier ist Michael Adams von Star Telegraph TV. Ich bin heute in Vancouver bei Aroway Energy mit Chris Cooper, President and CEO. Stock Telegraph und ich selber sind ja seit 3 Jahren, glaube ich, überzeugt von Aroway und haben sie auch konstant die Message nach draußen getragen. Ich wollte die Gelegenheit nutzen, heute nochmal über die neuesten Entwicklungen mit Chris zu sprechen und insbesondere auch einen Ausblick auf 2014 zu bekommen. So Chris, thanks for taking the time to talk to me.
Thank you.
And I was just in the introduction, I was telling the audience that, as you know, myself, I'm a long-term supporter of Aroway for at least 3 years, and we have been through ups and downs together.
Yes.
Right? At the beginning, it was more ups. Then in 2013, it was more downs, and right now it seems like we are recovering. So the stock price already doubled since the lows. Right,
Yes.
The lows were around 16, 17 cents.
That's right.
And right now we're trading around the 34, 35 cent level. So let's recap 2013. Yeah, what happened in 2013? I would like to that you give us some, like the highlights, but maybe also talk about things which, in retrospective, you would have done different, or where you had some real challenges.
Sure. 2013, I guess, moreover, started at the end of 2012. We had, we completed some acquisitions. We came into 2013 with a good, solid production. I think we had hit that 1,000 barrel a day mark, which was, a major milestone for the company.
I agree.
Unfortunately, when we hit that milestone, we had a new pool discovery in our Kirkpatrick Lake well, which is 100% owned by Aroway. And because it was a new pool discovery, the Alberta Energy Regulator, made us file what's called a GPP application, or a good production practice.
Okay.
Basically, it's a booklet so big, talking about the engineering, the characteristics of the pool, how we're going to produce it, whatnot. Anyway, so what happened is they took us from a well that was producing 650 barrels a day. They made us turn it down to 50 barrels a day until we submitted this application.
Okay.
And then when they go over the application, which is a process of about 3 months, then they come up with a ruling. They say, okay, you can produce your well at a certain rate.
Okay.
So what had happened is we were doing a little over 1,000 barrels a day. They brought us down to 50 barrels a day on that one well. So there's a huge disparity in production there and cash flow.
All right.
I don't think the market looked at that very good, because I know I was upset because we were doing so well at that point. And then they came back 3 months later and said we could only produce that well at 240 barrels a day. So, our production had gone from 1,000 barrels a day to, let's say 600 or less than 600 barrels a day. So, and that took a big blow to us. However, there was some silver lining in that ruling that we could produce every other well into that same pool at a maximum rate of 240 barrels a day.
Okay.
So, that was a bit tough. So I think we started to, take it on the chin, as it were, on the stock price on that point. And then I think we entered into some really tough markets. We looked around us as a company and we said, we looked at all the other juniors in the area, and a lot of guys were getting hurt, and mainly because they had a pretty weak balance sheet.
Okay.
So for the better part of 2013, we focused on cleaning up our balance sheet. We noticed that a lot of companies around us were, their debt was getting too high. The banks were coming after them. Some of them had to go into bankruptcy. So we focused the large part of 2013 on bringing down our debt level. So I think we were around $4.5 million at the beginning of 2013, because we had financed an acquisition, our West Hazel acquisition, through bank debt. We stand today, our bank line's at $1.7 million. So we got $1.7 million of debt.
Okay.
And that was a bit of a, we didn't have a lot of operations going on throughout 2013 because of that. But I think going forward, we're going to be much better off. Financially, we have a strong balance sheet going forward. So I think the quietness of the operations and just focusing on the cash flow and paying down our debt hurt us in 2013.
Right.
But we've now taken care of that. So 2014, I think we're going to be.
So in other words, or to sum it up, 2013 was the year where you have been limited in the production by some laws, regulatory stuff.
That's correct.
And you took that time to do your homework, to clean the company up, so that 2014, you're kind of really a clean company, and you can try to use the opportunity which the market is right now giving you, especially because you mentioned the bankruptcy, so there might be some opportunity for acquisition. And but maybe one step back, when, as you remember, when I started covering Aroway, the main asset was the joint venture in the Kirkpatrick Lake.
Yes.
So, and you didn't really have like your own production. To me, it seems that over the last month and years, there has been a switch in the business strategy. You still have the GV, which is at very favorable terms for you, as far as I remember. But still, in addition, you brought, or you acquired your own projects where you were the operator. Is that right? Is
That's
that like
correct.
a strategic change? So moving forward, you're going to be the operator, or are you also looking for more GVs?
Well, when we, as you mentioned, when we started Aroway, we built the company based on a joint venture relationship. When you start an oil and gas company, unless you've got $10 to $20 million to go off and create a company, you can't. You got to look for joint ventures, and so that's what we had done, because we didn't have that kind of a war chest to go out and spend and be an operator to start out with. So we were fortunate enough to be brought into an opportunity with a joint venture partner. We drilled a bunch of good wells. We had a really, really good well, but we were more of a one well wonder with a huge block of land, and we still retained 50% interest in that block of land. But we decided that we had good cash, we had good cash flow. We did some acquisitions, and we became an operator. When you become an operator, you're in charge of your own destiny. You're in control. You're not having to wait for another partner or operator to do operations. You can move at a quick pace and communicate to the market what you want to communicate.
It's like being in the driver's seat of a car instead of in the
Exactly.
rear. In the
Exactly.
rear. Okay.
Exactly. So we made that conscious decision in 2012 to become an operator, and it has been the best thing that we've done. We retain the 50% interest in the joint venture partner. We're still very close with our joint venture partner, but we just don't have the funds to do all the operations that we want to do as an operator on our 100% owned properties, and the operations that they want to do up in the Peace River Arch. So we've focused more over the past 18 months on Aroway's 100% owned properties. And if we can continue to build up our production on those properties, we will have the cash and the cash flow to possibly go out and do some more work with our joint venture partner. But we look at it as saying, I'd rather have 100% of this nice development oil well as opposed to 50% of another well that we're only getting a smaller bit of production from. And we're in control. So
I agree.
I think when you get to be a certain size, it is extremely important to be the operator.
Right. And talking about being the operator, in the Carobert, I cannot pronounce it, the Carobert area, there was some new developments. You already had some claims there, but there was some missing gaps which you now filled up.
Yeah, so we had about 9 sections of land that we had purchased at Crown Land Sales. And in between those sections of land, there was a bunch of freehold land that was owned by a major company, major independent oil producer. I've been negotiating with them for 6 months on trying to fill the gaps of our lands and create one big contiguous block of land. And as we announced January 16th, we executed this farming agreement with the major company. And
are you allowed to say the name of it?
I'm unfortunately I'm sworn to
No
secrecy. They are New York Stock Exchange listed companies, so they're a very large
it's really
company. It's a big company. And so we've managed to sign this farming agreement with them and a seismic option agreement, of which we are shooting a large 21 section 3D seismic program. We have a number of wells that we think we can drill that this property has the potential to take the company to about 2,500 to 2,800 barrels alone from this property.
Wow.
Now, it is exploration. We think that's the potential. We need to prove that the oil can flow. There's a company just south of us that's producing 2,500 barrels a day right now from the same formation that we're targeting. However, we are further north than they are. But in the early 60s, there was a well drilled on this property that we own. Yep. That a well did flow oil from that formation. So we're confident, our geologists are confident, our geophysicists are confident that we
Okay.
can get this to work. So,
What's your timing on this?
well, we are about 80% through our 3D seismic program right now.
Okay.
Upon completion of that, which should be another 2 weeks, we'll then process the seismic, which should take us about another 2 to 3 weeks. And then we have to make the decision on whether we want to move forward and continue to drill on, or to begin to drill on this land.
Yep.
But from the work that we've done already on the lands, independent of the 3D seismic, we know that we want to drill a few wells into it anyway. So, and then we notify the major that we want to go ahead and drill, and then we can, if we have success, we can have a huge drill program going forward. We can drill upwards of 300 wells on that property, and hopefully exploit it to its the value that we think is there.
Right. So 2014 looks to be like, could be a pretty good year. Yeah, an exciting year with growing production and all these new wells or probable or possible wells coming into production. So are you also looking to acquire more projects, more claims?
Yeah, absolutely. There's we've been looking at a number of acquisitions over the last 12 months, and we think there's a lot of opportunities, and that just speaks back to the decision we made to pay down our debt during 2013, because there's a lot of companies that took on more debt and they can't afford to service their debt. So there's a lot of really good assets that are for sale, and we think we'll be able to go out and get those assets. So there's a lot of opportunities. We look at it as a buyer's market, and it has been for a couple of years now. You look at the acquisition we did at the end of 2012 with our West Hazel.
Yeah.
You know, we got that for $10,000 a flowing barrel.
It was a bargain.
It was a bargain, and there are acquisitions out there like that still.
Yeah. So to sum up, what do you expect from the oil price in general?
You know what? It's funny. You get people on one side saying it's going to go to $120 a barrel. You get the other people saying it's going to go to $80
No, I'm asking
a barrel.
you. Not
I'm a big believer. I'm right in the middle.
Okay.
I think we're going to be in the $95 to $105 range for quite a ways to come.
Which is comfortable for Aroway, even if you get a lower, a
yes.
lower price because you.
Well, our netbacks, for instance, on our Kirkpatrick Lake property, which we just brought on our new well, which is performing just excellent. We're netbacks are over $60 a barrel.
Okay.
Those are fantastic. Our operating costs are low. So, and if you look at all the engineering firms, they have their price decks. They're in that $100 a barrel range for a couple of years. So I think it's going to stay there. You got to remember, it's a depleting product, right?
Yeah.
More oil you take out of the ground, they're not making it more.
Yeah. That's right.
It depletes. So I think the demand is as strong as ever. So I think that the price of oil is going to stay pretty stagnant where it is now.
Okay. Thank you very much for taking the time. Good
Thank
luck
you.
with the endeavors.
Yes,
Talk
thank
to you
you.
next time. Let's catch up.